Okay, guys, here's a perfect opportunity to show you how to adjust a trade. Let me just take this for a second and show you where we are. We've had a tremendous run on the Dow Jones Industrials in the last couple of days. We're up 256, then we're up about just a point or two yesterday. We didn't really do much, but now we're up again significantly today. In fact, the Dow's up almost 200 points. And so we put our positions down here, and so we've had a tremendous run up. Now this is on our iron condor. So we were short calls and we were long calls up here, and our spread when we put it on was about 40 cents, and now we're getting killed. It's over $1, so it's about $1. So we're losing 60 cents on that. But this is where knowledge comes in and understanding what you can do with your positions. This was a resistance level. We blasted through that. We'll probably go back up and hit this 13,000 level, which is the next major level that I've seen. But we've got our position on the SPY, so let's take a look at the SPY here for just a minute. We gap opened down here, had a big up day. We had put our position in, down around here. Then we have another huge gap open here, which is right against one of our resistance points right here on the SPY. So whether or not this is actually going to hold and pull back or not, I have no idea at this point. I don't try to predict price. We just try to manage our trades. So on the S&P, let's just take a look here at the trend line. Price level I want to do. And the price level that we want to take a look at is right in here. So we've got a little bit of room to move up around the 1400 level before we actually start to see some pain. So in this position, we're short the 139s, we're long the 141s, and right now they're trading at 106, so we've lost about 50 points, 55 points on that. But what we can do is we can simply, this is where adjustments are so critical. We can, in fact, roll our position up to the 143. Oops, I didn't mean to do that. Just delete that. Up to the 143, 145 position. We're going to take in another 53 cents credit here, and what that will do to our position, I can show you. What it will do here is we're just going to roll that position up. So we're taking these two off. We're putting on a higher credit spread. And what that does is it just extends our break-even point now all the way out to 144. We thought we had a let's take a look at this here. Where's our profit chart? Here we go. 144 would bring us just above this 1400 level. Probably, let's see what that actually says there. That's just about 144. So we could bring it right back up there. It doesn't hurt our position because, let's see, it'll take that off. I'll put these two back on just to show you. Our break even is right here at about 139. And we get back into the position for really almost a break even. We're able to maintain our position and our profitability and extend our break even out to 144 now. So you don't really have to get hurt if you know what to do ahead of time. That's why I always say trade with confidence, because knowledge is power in this business. We lost 50 cents so far in this position. We're just going to roll it up to the next credit spread, just up and out just a little bit farther, and take in some more credit, and we're going to maintain our position that way. So that's what we're going to do, and that's how you adjust a position that's going against you. This is on an iron condor, and that is how you don't get hurt, because you lost 40-50 cents on this one, but you're getting the credit back on this one. And if necessary, if this market continues to run up, we will continue to roll this position up so that we don't eventually get hurt before expiration. and that's all you really have to do. Yeah, you're selling that as a loss of 50 cents, but you're gaining the 50 cents credit on this one, so it's really a wash. Okay, so we rolled our position out, and now we're looking a little bit better. Now our break even has moved up to about 144 here. We'll just take a look at this. Yeah, it's about 144 now, and we're just about it. Our price is 138, so we've got quite a run here that we can go to. And we actually took a little profit, and we've got about $80 in profit here, and our graph is looking really good. So we all we did was close out the shorter position, as I showed you, the short vertical spread, and rolled it out for a credit to a higher spread. And that's how you don't get hurt. I mean, if you know what to do, you can spread out your break evens. Now we can tighten this up a little bit if we want to. We can bring let's take a look at our put position. We're way down here. We're at 122, 124. We've got, let's see, we've got maybe, if we had to, we're short these, so we'd have to buy these back at 19. Oops, I'm sorry, I'm over here. We're at 22, and we'd have to sell those out at 14. That's only 7 cents. You know what? It kind of makes sense to kind of roll those up as well. Maybe you can get some more credit by rolling them up maybe to the 130s and get another 20-30 cent credit on that. That would also help the profitability of our position. If we got if we got up to around 130, that would be nice. So let's see. We got the put spread on at about 30 cent credit. So let's analyze this. We'll create a closing order for these, and we can actually take them off for maybe around 7-8 cents here. And let's see, so we made about 20 cents on that, and then we can roll these up. Let's go up to the 132s here and see what we can do. We'll sell a vertical there. Let me just change this for a second here. And we'll sell this vertical. Let's see what this does to our position. We're only going to get a 14-cent credit on that. Oh, okay. Let me move my put down a little bit. And get another 26 cents credit. It's not too bad if we can make another 20 cents on that. Let's take a look at this duplicate trade. So we're going to be taking these off. And we're going to be adding this other position. And then what does that do? Well, we'll take a look at our picture. I mean, if the picture looks good, remember if the picture looks good, then we're going to be in a profitable position here. Right now, if we take off that 20 cents, we're going to make about $100 profit. If we put on another position, you can see that we're going to be, we're not going to have that $100 profit anymore, because we've got about $100 profit now, $86. But it puts us in a position to earn another $80 in credit. So all we have to do is we'll roll that up to the 132, 130 vertical short spread, and that just brings up our break even on the downside. Before it was, let's take a quick look at that. Before it was way down there. We're way down. We're down around break even is around 123 down here. And if we put this position on and we take off the one that we have for a profit there, then it moves up our break even to about 131, which is fine. But let's take a quick look at the chart. 131 on the SPY. Is going to be way down here. So, and we're way up here. So unless we're in a real bear market here and all of a sudden prices just totally collapse on us, which could happen, and then we'll make a profit on the roll that we just made on the upside, and we'll roll down the and if we hit the break even down at the bottom side, we'll do the same thing that we just did on the call side. We were hitting up against that other level break even up on the upside, and we just rolled it up for another credit. We could do the same thing on the downside, and we take a little profit at the same time. Now, commissions are always an issue. That's why I wouldn't sell this for less than 8 cents, because we did put it on for 28 cents. So we got 20 cents in there. That's about $100 profit on 5 positions, and we're rolling it up for another 27 cents. So, or maybe 26 cents if we hit the mid price. So, let's and then we take another 20 cents. We can make another $100 off of that. But we can do that. It's about $15 in commission. So we do give up a little profit, but we're in a profitable position. So, it's not, we're not talking about being in a position where, that we're not making money. We are making money. We're taking in credits. We're actually selling positions back in a profitable position. So, it's not a bad position to be in. And we got filled right away on those. That's one thing I like about the SPYs, is that, boy, you get filled very, very quickly on those. So let's take a look at our position now. We're going to delete our simulateds. And now we're back into a position where, we're right about in the middle again. We're right at 138.53. We're pretty good. We've got our break even's 144 on the upside, which was a resistance level. Break even is 131 down at the downside, and we're back in the middle. We're not hurting on either way, and we rolled it out for a credit on the upside. We took our profits on the downside and moved up for another 20-cent credit if we don't hit that downside, and so we're in pretty good shape. And that's how you adjust your iron condors, at least. When you hit those break evens, just roll those credits up as long as you can do it, so that you don't get you don't get killed on those. Because if you let's say you sell those for 40 cents originally, and you can roll it up for another, and you've lost maybe 40 cents on that, and you can roll it up for another 40 cents, it's a break even position. And you've extended your break even on the entire position even more. So, why not do it? It's a good opportunity. And you can still, it has not hurt our profitability on the overall position at all. If you take a look down here at our green expiration profitability graph, we're still at $370, which is very close to what we initially put the position on for. So we're kind of hoping to get at least 50% on that, or about $180 going towards the the close over the next couple of weeks. So that's how you manage your trades. You adjust as necessary. You don't have to get hurt. You don't have to take losses. You can, as you can see, we did not take a loss. In fact, we took a little bit of profit out of the position, and it was right up against our break even on the upside. We rolled out for an additional credit. We took our profits on the low side and rolled up for even more credit. So that's how you adjust these positions. You do not have to get hurt in the market if you know what to do. So go out there and trade with confidence.